and welcome everyone. My name is Evelina and joining me today is our own Chief Tax Expert at Tulpa Global Taxation, Mr. Shibu. We will be discussing an exceptional tool for wealth preservation and tax optimization, family foundations. Welcome, Mr. Shibu.
Thank you, Evelina, for the introduction. And I am really happy to speak about Family Foundation, one of my favorite subjects, which is going to help a lot of business entities in the UAE to use Family Foundation as a tax saving concept.
Okay, so when families use a family foundation, is there a corporate tax treatment they should be aware of?
Absolutely. When a family foundation is used, first it has to be a foundation. In the UAE, family foundations are created in DIFC, in ADGM, or in RAC ICC. These are the three common places where people establish family foundations. And the second condition is they should meet 5 conditions as per the Article 17 of Corporate Tax Law.
Can you take us through those conditions?
Yes. The first condition to meet is beneficiary condition. The law says the family foundation must have beneficiaries listed. The beneficiary should be identified or identifiable natural persons, or it can be a public benefit entity also. Now, let me explain what is identified or identifiable persons. Identified person will have a name and he can be seen. He will have a name. Now, whereas identifiable person can be someone who is unborn at the time of foundation creation. For example, say the child or grandchild of ex beneficiary, which is there. So, this is the identifiable person. And when it comes to public benefit entities, it can be a charitable organization or it can be a not for profit organization. And it is not necessary that it has to be an entity established in the UAE. A foreign entity can also be listed as an entity.
Do the beneficiaries have to be related?
Not necessarily. An unrelated person can also be a beneficiary of the foundation, and this is up to the founder whom he needs to be, shown as the beneficiary. And also, there is no minimum or maximum number of beneficiaries mentioned as per the corporate tax law.
Okay, I see. Can you take us through the second condition?
The second condition states the principal activity of the foundation is to receive, hold, invest, manage the assets of the foundation. This includes buying, selling of stocks, bonds, real estate assets to increase the earnings of foundation for the beneficiaries.
Okay, can a family foundation conduct business activities?
No, a family foundation must not conduct a business activity that would have constituted a business or business activity if undertaken by a natural person. Say, for example, a foundation having residential units and a motel, and the residential units can go for lease and rent comes, there is no business activity. But whereas to run the motel, it needs a separate license. Without license, it cannot be operated. So, if the founders run the motel, then they are not meeting the condition. Instead, they are renting the building as such to a third person and collecting only rent, keeping quiet, they are meeting the condition.
Excellent. So that is the third condition. How does the law view tax avoidance in this context?
No tax avoidance is another condition which has to be met to make a family foundation as unincorporated partnership. The main purpose of a family foundation is to receive, hold and manage the assets of the foundation, and making an application to FTA to treat it as unincorporated partnership, to exclude the income from corporate tax in itself is not seen as a tax avoidance purpose.
So, what is the final condition?
The final and fifth condition is distribution condition, where public benefit entity is one of the beneficiaries. There are two conditions, and one of the conditions must be met. The first condition being, if the public benefit entity earns any taxable income through public benefit entity, such beneficiaries are not deriving any income through family foundation, which is considered as taxable income if they earn it on their own capacity. The second condition is the taxable income which they earned, the public benefit entity earns, is distributed within 6 months from the end of the relevant tax period.
Okay. What is the eligibility criteria for a juridical person in a multi-tier structure to be treated as unincorporated partnerships, if it is possible?
Yes, it is possible. And let me explain you what is multi-tier structure. Say there is a family foundation called X, and an LLC company called Y, which is doing real estate investments, fully owned by the family foundation. And there is another entity owned by real estate business called Y, owning a company called Z, doing stock investments. Okay, so there are three companies: X, Y, Z. X is family foundation, Y is doing real estate investments, and Z is doing stock investments. All of this is doing business activities which can be transparent, right? Now, in this case, X is owning 100% of Y share, and Y is owning 100% of Z share, and all these entities are fiscally transparent. In this case, all these companies can apply to FTA to make their income not taxable. Means all are fiscally transparent. Now, the second condition to meet is all these entities should meet condition of Article 17.
So, as a final remark, what kind of businesses do you think can be helped by forming a family foundation?
I think as far as UAE is concerned, there is a lot of real estate companies owning real estate assets. Okay, if the owners of these companies can double check if they are falling under the activities of selling, leasing, subleasing, and renting of properties, which is defined in the law as real estate activities, and the income from these activities are not taxable, okay, they can think of forming a foundation and look at tax saving. And the law clearly says it is not tax avoidance. They are just applying to FTA to treat their income to be excluded from the tax. And another category I will see as companies which focus on investing into shares. So if these are the two type of companies which I see have the potential to use family foundation as a tax saving concept. Thank you.
Thank you very much, Mr. Shibu. And thank you to all our listeners. If you have any specific questions, please do not hesitate to reach out directly to Mr. Shibu and our advisory team at Tulpa Global Taxation.